Hi everyone, I am Rovishenyo and I'll be your tutor for your accountancy. Okay, so this will be your textbook for your accountancy in class 11, which is by Tuitions. And accountancy is the core subject for commerce students. If you get the concept clear in class 11, that means you will not struggle in your higher classes, as well as if you want to go for any courses such as company secretary, chartered accountants, MBA, BBA, whatever course you want to take based on accounting, you have to get the concepts clear from class 11. Then you will not struggle in the higher classes. So accounting in simple terms, or in basically is known as the language of business. Okay, accounting is in simple terms known as the language of business. But the American Institute of Chartered Public Accountants have defined accounting as accounting is an art of classifying, summarizing, recording in terms of money and events which are at least of financial character and interpreting the results thereof. So the basic definition that we use in accounting is the traditional definition that is given by the American Institute of Chartered Public Accountants in the year 1941. In accounting, we will learn how a business runs and how a firm manages its assets and liabilities as well. So accounting, the definition given by AICPA in simple terms can be understood as these activities. So if you want to learn the definition of accounting, that means you remember this thing, IMRCSAC. So this IMRCSAC includes the definition. The first word I is identify. Okay, so you have to identify the business transaction. You identify the business transaction which are of monetary terms. In a business or in a firm, there are activities happening, there are events occurring, but we record and in accounting we take into account only those transactions of monetary character and which are of financial character. So identifying the business transaction in monetary terms. Okay, the next M here means measurement of money, or measuring the money. Suppose in an enterprise you have 10 trucks. Okay, you have 10 trucks which those 10 trucks are your asset, and if you turn it into a monetary value, each truck might be rupees 10 lakh. So if you have 10 trucks, that means it will be 1 crore, right? So that 1 crore is the value of the money that you have in your firm, and that value of the money here in money measurement concept, we turn our assets and the value into monetary terms. The next activity is recording. In business, all the activities are recorded. Okay, recorded as soon as the happening of the events, that is those transactions which happens in monetary terms, are recorded in a book of original entry known as the journal. So as soon as the business transaction that happens, that is in terms of money, any activity in a firm that involves money should be recorded as soon as this transaction is done. So that recording of the original book of or recording of the monetary transaction is known as journal. The next is classifying. Once you record in your journal, that is once you record the transaction in your journal entry or the original books of account, then you classify those accounts. Okay, you classify those transactions. Suppose sales is made, then you put it into sales account and you prepare a sales account. If the purchases are made, that means you have to classify it into purchase account. If it is done on cash, then cash account. In classification, you will classify the different transactions that have been recorded in the journal. So in recording, you just enter as soon as the transaction is done, you enter in the books of record. But in classifying, you will differentiate the books of account. Suppose if it's cash is done, then in cash book. If purchases have been made, then in purchase book, and cash has been spent, then in cash book. Those things are done in classification. And recording is done in journal, classification is done in the books of ledger, which you will learn in the later classes. The next is summarizing. Once you classify the different transactions into different categories, now you summarize it. You summarize the transaction from the journal entry, from the ledger entry, and then you summarize it. In summarization, we come up with an income statement that is known as trading and profit and loss account. Here we know the financial position of our company. That is, we summarize those transactions related to journal and then ledger and summarize it into a financial position. We prepare the profit and loss account. Once we prepare the profit and loss account, that is, once we summarize it, the next thing we do is analyze and interpret it. Here A means analyze and interpreting it. Once we get the figures, that is the profit or losses, then we try to analyze it. We interpret it in a very understandable way so that the users will not find difficult in understanding the accounting information. So interpreting and analyzing is just examining the figures and then making it communicate in a very understandable way. Next is C, is communicating. So once you have done these steps, that is, once you have summarized and got your financial position, that is the profit or the losses, then you communicate it to the users. You give the information required to the users, and these users may be management, shareholders, potential investors, employees, customers, and so on. So the easiest way to remember the definition given by American Institute of Chartered Public Accountants is, remember this word IMRC SAC. I is identifying, M is measuring in monetary terms, R is recording, C is classifying, S is summarizing, A is analyzing, and C is communicating. So if you find it difficult to understand the definition of AICPA, then just remember this 7 words, okay? Then it will be very easy for you to define the definition of accounting. But in simple terms, accounting is just the language of business. But for your exam purposes, you have to memorize the definition given by AICPA. So the next is accounting can be both art and science as well, okay? Accounting is an art because we come up with different techniques, we follow different techniques to we use different techniques in accounting to come up with a concept. And so that's why accounting is an art, because in art we use different techniques to come up with a concept. In the same manner, in accounting we use different techniques to come up with a concept, and that's why it is known as art. Accounting is also known as science because in science they have different principles and different experiments based on the past. In the same manner, in accounting also we have different principles such as GAAP, generally accepted accounting principles, and so many principles given we have under the accounting principles. So accounting is also a science because we based on different principles, and also we rely on the past experiments and historical data. So accounting is both art and science, okay? The next is accountancy. The name of your book is Accountancy. So what is accountancy? Accounting is just the systematic understanding of accounting. If you understand the accounting in a systematic way or in a very sequential way, then that is known as accountancy. In accounting, there is an accounting cycle, okay? So this accounting cycle is the sequence or the process that begins with recording and ends with the position statement. So this accounting cycle is just a process that needs to be followed in account while maintaining the books of account. So it starts with journalizing. This in journalizing, what you do is, as I have said earlier, in journal entry, okay, journal entry or journalizing is also known as the book of original entry, because as soon as any activity that consists of monetary value happens and occurs, we record in a book known as journal. So the first step or the first book of accounts that a firm maintains is journal entry or journalizing, that is journal book, where we record every activity in the business, every transaction that consists of monetary value, we will record in the books of account known as the journal. The next book of account that we maintain is ledger. We post the transaction recorded in the journal, we post it to ledger. Okay, so ledger is a book where you classify different accounts, and you in journal entry what you do is record every business transaction as soon as it is having. So be it sales, be it purchase, be it expenses, everything you directly record it. But in ledger we post it to different books of account, like the sales. If sales is made, then we record it in the sales book. We transfer it from the journal to the sales book. If purchases, then we transfer it from the journal entry. We take the record and then transfer it to purchase account. In the same manner, sales and cash and so on and so forth. So we will classify the different book and different purchases, sales, cash, whatever is done from journal to the ledger, that is posting. The next step we do in an accounting process is posting. The third step is balancing. Okay, in a ledger book or in a ledger account, what you have to do is you have to get the total of debit and total of credit. In accounting you have debit and credit. So in balancing, the total of both, the total of both the debit and credit should be equal. If suppose debit exceeds the credit balance, then it is known as debit balance, and if the credit side exceeds the debit side, is known as the credit balance. So in balancing, what you have to do is debit should be equal to credit and credit should be equal to debit. So what you do here is, if the total amount of debit is rupees 10,000 and the total amount you get in credit is rupees 8,000. Okay, so if you get rupees 10,000, so in credit it is 8,000 rupees. The total of credit is 8,000 and the total of debit is 10,000. But what we do in balancing is we have to equalize it. Debit should be equal to credit. Okay, according to dual aspect concept, debit and credit should be equal. So what we do is that since debit is more than the credit, after getting the total, the debit is more than credit, that is 8,000 rupees and debit is 10,000 rupees. What we need to balance is rupees 2,000. So this 2,000 rupees is known as the debit balancing figure, and this balancing figure is written by to balance down or by balancing figure. Okay, in the same manner, if it is in credit side, you do it by balancing figure rupees 2,000. So what we do in balancing is we equalize the total of debit and total of credit. The next process is trial balance. In trial balance, what we do is we prepare an account. Excuse me. Next is trial balance. So in trial balance, what we do is we make an account to see whether the total of debit is equal to the total of credit or not. We will verify the balancing amount and see whether there is any mathematical errors or not. And if there is any mathematical errors, then we will try to make it correct. We will have to take corrective actions. So trial balance is nothing but the overseeing of the balancing done in the ledger, that is whether the total credit and the total debit is equal or not. The next is income statement. Income statement is a statement, or it's a trading and profit and loss account. Once we finish doing the trial balance, the next account that we maintain is the income statement. So in income statement, what we do is prepare a trading and profit and loss account. In trading and profit and loss account, we record all the activities related to trading, and then we will come up with a statement known as income statement. Profit and loss account is prepared to know the profit and losses of the business. So the next book of account that is maintained by the firm is income statement. So income statement is known as trading and profit and loss account as well. So in trading and profit and loss account, we prepare this income statement to know the profit and loss of an enterprise. We enter all the transactions related to the trading activities. Okay, from journal, from ledger, from trial balance, we'll take all the activities relating to trading and then prepare a profit and loss account. And the next one is position statement. Position statement is also known as balance sheet, where you get the total of assets and liabilities. You will get the total of assets and liabilities, and through position statement you will know how much worth do you have in your business. The position statement defines the value and the worth of your business, because the asset you have in your firm will define the value of your business. So how much asset worth do you have in the business is done in the position statement. So in accounting, this is the process, or this is the sequential steps that have to be done. You cannot jump from journal to direct making of balance sheet, okay, or you cannot jump from ledger to making of balance sheet. You have to follow this process in books of account. Once you start solving the problems, you will get the better idea of it. So first what we have to do is we have to record it, then we have to post it to different ledgers, then we have to balance it and come up with a position, come up with the income statement, and then prepare the position statement. So these are the steps that you should follow while preparing the books of account in accounting. So remember these 5 steps. It is very important, and you will use it the entire life of studying accounting. So this is very important for an accounting student to do with the books of accounts and to do accounting. Next is in today's class we have learned about the meaning of accounting, that is, in simple terms, accounting is a language of business. Then we have also understood that accounting is both arts and both science. So there are certain activities that happens in accounting. So these activities, that is, easiest way to remember these activities involved in accounting is IMRC, SSC, and accountancy. We have also learned the meaning of accountancy. Accountancy is the systematic record of accounting, and the sequential steps, or an accounting cycle, the sequential steps that need to be followed by an accountant while doing accounting. We have learned these 5 steps, which are very basic and very important before we start any problem, or for an accountant to maintain the books of account, we need to follow these steps. Thank you.